Today is exceptionally opportune moment because we are lucky, delighted also to have Leora Klapper from the World Bank to share with us some of the brilliant work that she's been doing at the World Bank with a couple of her colleagues. I think my last encounter with the Leora was at the African Economic Research Consortium when I was giving a paper on a national culture, and she gave me brilliant ideas in terms of kind of going forward. Leora, that kind of contribution to academic work, not only on the work but the work of colleagues, is very much appreciated. And so let me have this opportunity to introduce her formally. Leora Klapper is the lead economist in the finance and private sector research team of the development research group at the World Bank. You will have seen her publications, no doubt. And most of her publications focus on corporate finance and household finance, fintech, banking, and entrepreneurship. Very much the territory of the Center for Global Finance. And her current research studies the impact of digital financial services, especially for women. So there is an important gender perspective, which the Economic and Social Research Council tends to emphasize these days. Whenever we're headed for grants, they just push where is the aspect of that. Okay. So, and of course, she's not new to you. Maybe you haven't seen her face to face, but in terms of new to you, you would have met her through the Global Findex database, which she's the founder of. And the database measures how adults around the world save, borrow, make payments, and manage risk. And previously, before joining the World Bank, she worked at the Board of Governors of the Federal Reserve System and Salomon Smith Barney. She's also highly qualified with a PhD in financial economics from NYU Stern School of Business. I could go on and go on a long CV, but I think you may have already met Leora in one way or the other. And now it's a great opportunity that she's here to speak to us. Leora, you are most welcome to the Center for Global Finance Seminars, and you have the floor.
Thank you, and thank you for that kind introduction. And I really appreciate the invitation to join you today, and sincerely sorry that I don't get to join you in person. Both London and the University of London are some of my favorite places. As Victor mentioned, I also lead the Global Findex database, which is a set of indicators on financial inclusion that we collect based on interviews with over 150,000 adults around the world in about 145 countries. And we're currently, we had started collecting the fourth wave of data last spring when, unfortunately, surveying was shut down because of COVID, both because of the health risks, both to the interviewers themselves, and also the risk that interviewers could spread the virus around communities. We're now currently, as we speak, collecting the data over the 2021 calendar year, with lots of new questions on digital payment adoption during COVID, including in-store and online merchant payments, online bill payments, remittance payments, government payments, and most relevant for what we're going to talk about today, how people get paid for their wages, which also really inspired the research that I'm going to talk about. So before I started, this is really the first time I'm giving this, it's really necessary to consider this discussion in the context of COVID-19, which has accelerated the use of digital payments as physical distancing became necessary, cash became unsanitary, and traveling to make and receive payments became a health risk. And so governments use digital payment platforms to quickly disperse stimulus funds. For example, in Togo, the Novisi cash transfer program made payments to almost mobile phones, almost 20% of all adults. Informal workers in Morocco were able to receive government help quickly through their phones. And there was also a surge, especially in Asia, in digital salary disbursements. For example, according to the Bank of Bangladesh, salary disbursements as a share of total mobile money increased from 3.7% in April 2020 to 7.3% in July 2020. And what happened in Bangladesh, again, to set some context for my presentation, is that when COVID hit, factories weren't able to produce. Nike, the global buyers started pulling their orders, and they didn't have the money to pay their workers for the last month's wages. And so the Bank of Bangladesh, the government supported the factories by paying workers directly into mobile phones. And they were only allowing digital disbursement of this emergency COVID-related wage payments. And so we suddenly saw a surge in new account holders, in new digital payment recipients, which really makes this research more salient, as I'm going to talk about how the use of accounts can really improve financial capability and financial savviness. And so, really, this research I'm presenting today, I would suggest really has greater urgency. And so let me begin. And so what was the motivation? As I mentioned, just simply, started with we started collecting data in Findex on do you work for a private employee? How do you receive your money? And seeing, that there was both, most workers around the world were paid in cash, but we also were seeing just the growing number of workers who were working in global value chains. So think about garment workers working for factories who are producing, the factories we work with in the study, for example, are making goods for Marks and Spencer and for H&M. Agribusiness chains, which is a different piece, farmers selling their goods directly to Twinings and to Heineken, Nutella. And so the question is, how these buyers can encourage greater financial inclusion in developing countries? And then, of course, the question is, well, how can they? And the answer is, and I'll talk a little bit more about it, is simply that Marks and Spencer, Gap, H&M are now requiring their suppliers to pay their workers electronically. This is one of their sustainable standards that they're requiring. Why? It's because they want the electronic trail of fair wages. And so Marks and Spencer, especially after the horrific fire in Bangladesh about 10 years ago, which was, there were many casualties because of, it exposed a number of safety violations and also violations of fair wages. The big buyers are requiring this electronic trail and threatening to cut off suppliers who aren't able to pay their workers electronically. So suddenly there's, again, this urgency among factories with workers to pay the workers electronically and understand how to do it that both beneficial for the factory, but also for their workers. And just as an aside, we also did a study with UNCDF of factories in Bangladesh. And we found, when we went to visit, we met a factory who every month paid over $1 million in 500 taka notes. That's $5 bills. And so they would have to pay the expense of driving trucks out to their factory. They had to pay security guards to stand securing the truck. They had to give up their managers' time to dole out the cash. And most significantly, their workers left the production line for hours to stand on line. And we estimated, based on surveys with about 30 factories, that the factories were losing about 750 productive hours a month, every month, in doling out in cash wage disbursement. And so there's absolutely the business case for the factories, for the ultimate buyers, in digitizing wages. And so that's the context. And so we have a specific motivation here. According to the World Bank, there've been over 1 billion adults have gained an account. There's been rapid adoption of account ownership that's both at banks and at mobile money accounts, especially in sub-Saharan Africa and parts of Asia. There's a growing evidence base on the advantages of financial inclusion, of account ownership, especially for women. Everything ranging from the household spending on nutritious food and education, on better jobs, a reduction in poverty and inequality. But yet, there's still consumer protection concerns as new financial products and technologies are rolled out, whether people have the capability, the understanding to use these products responsibly. And we also know that financial intermediaries can exploit less sophisticated customers. And so our overarching question is, how do people learn to use new financial technology? And how is usage related to this technology adoption? So our setting, as I've already set up, we're interested in looking specifically. I'm sorry? We're actually looking specifically at digital payroll. So who's our population? These are low-income workers, mostly women. About 80% of our sample are women who have formal employment, verifiable income, and their employer in Bangladesh is able to open a bank account for them. And so formal sector exporters of businesses can take their formal records and use that as identification to open accounts for their workers. Using a very simple technology, bank account, mobile money accounts, these only require text-based phones. Called a natural experiment because this wasn't out of the ordinary. As I mentioned, there's a rapid adoption of digital payments being driven by the large buyers, and we're measuring ultimately account use and consumer learning. So this is all observable both through surveys and through administrative data, which we receive directly from the bank and from the mobile money provider. Technology, as I mentioned, these payroll accounts are attractive, certainly for the factory. Digitizing payroll saves tremendous amounts of cost and time. We do know that factories often need to invest in MIS systems for digital payroll. Once they make that initial IT investment, they reported to us, both satisfaction with the product as well as cost savings. That, as I mentioned, that Findex data shows that about 85% of all employees in developing countries in 2017 were receiving cash wages. I'm sorry, I'm going to turn off my camera because I'm sorry if I'm maybe having some computer challenges. And so the elimination, and so what are the benefits for the workers of eliminating cash? So let me give you an example. We talked to workers about 6 months after rolling out this product, and a woman said to us, "My mother-in-law waited outside the gate for me on payday. Now she can't." And these women immediately understood by having the money go directly into their account rather than coming home with a wad of cash in their pocket, gave them more control over their money. They had more privacy, security, and control over how that money was spent. They literally got a more comfortable seat at the table. And it's interesting, like there's a work out of the Philippines that shows that when a woman gets her own account, the household's more likely to spend money on washing machines, on goods that are more important to the woman, maybe more important to the woman in the household. She has a greater say in how the money's spent. So that's one of the outcomes we're hoping to see. We also know that accounts can be used to save. A lot of that's just there's research just showing the default effect. Effectively, when you get money paid into an account, you're more likely to leave it there where it can be safe, as opposed to having, in Kenya, I remember kept hearing the phrase, "the cash burns my pocket." It's just too easy to spend when it's sitting in your pocket. And so, in this context of payroll accounts being rolled out to millions of employees, I mentioned wage transparency to meet ILO labor standards, with the extra impetus from COVID-19, we're actually looking at two types of accounts, bank payroll accounts and mobile money payroll accounts. And it's interesting, both really have sort of advantages and disadvantages. The bank payroll account is widespread. You can use ATMs to withdraw the money, and banks are really designed for savings. Whereas in mobile money accounts, although money can certainly be stored in the account, and increasingly, especially across sub-Saharan Africa, we're seeing mobile money accounts being used for savings. They're more typically transaction-based accounts. Certainly the most common usage of mobile money accounts are simple P2P payments, and increasingly also for remittance payments. And so we're running a field experiment. How much learning occurs naturally as workers begin to use their accounts. And we have, very importantly, 3 treatment groups. Okay, first, we have our control group of workers who get paid in cash. So they continue to get paid the way they had always been paid. Second, we have a group of workers who we give bank accounts. They get a bank account that randomly assigned a bank account, and the workers are randomly assigned an account, and then randomly assigned either a bank account or mobile money account. But they continue to get paid their wages in cash. Then the third group who receive both either a bank or mobile money account and direct deposits, okay? And this is really important because, one can say, well, of course the workers paid into an account do better than those paid in cash because they have an account. All you're really picking up is the use of the account, as I mentioned, sort of this default for savings. However, what's really interesting here is that we can disentangle access to the account versus usage of the account between those second and third treatment groups. And we're interested, our 2 main learning outcomes, in addition to other outcomes we'll talk about, is one, whether the worker is able to do transactions themselves outside the without assistance. So we arranged on payday, very importantly, to have a bank representative on site to help workers at the ATM machine withdraw their money. But do we see them, and just using administrative data, using ATMs in the city on their own? And secondly, can workers send remittance payments on their own without the assistance of an agent? And so to explain that, very typically, and we see this again across Africa and Asia, the inexperienced adult will go to the mobile money agent and say, I don't know how to use this technology. Here's money. Can you please send it for me to this phone number? As opposed to simply typing the number and sending it directly themselves. And of course, a challenge of using an agent is there opportunities for informal fees, right? And so the agent will say, sure, I'll do it, but I'm going to take a 10% cut for myself of doing this transaction for you. And so the second measure we're looking at is, are workers able to send it themselves? I'm sorry. And so and then what's really nice, I'll talk about at the end, is we did a separate audit study using actors. We send into to mobile money agents around factories that pay digital wages and around factories that pay in cash, and see, to see, is there a difference in one, whether the script reveals the worker as being financially inexperienced, like, can you help me use my phone? I don't know how to do it myself. And secondly, the neighborhood. Are there actually sort of a whiff of general equilibrium effects of spillovers into the community? And most importantly, how often are these auditors overcharged? And I'll just mention and put a plug in for my colleague, Chavi Ginny, is working with, co-leading a large IPA, a new initiative on consumer protection in developing countries. This is with Gates funding, where they're sending, doing these mystery shopper. They just completed one with banks, MFIs in Uganda, for example, and found just tremendous overcharging of customers. They've done it in Latin America, where they showed that adults aren't offered the best products, especially women, especially people who reveal themselves to be low income. I think this is a really important literature, this mystery shopper, as a way of, it's a difference between what banks publish, or what governments publish as, for example, simple no-fee accounts are always available, to whether they're actually offered them to people who need them. And these mystery shopper studies are getting at that. And so just to preview the results, and excuse me, I want to spend time with the discussion, so let me spend a little more time reviewing the results. And so result number one, we find that workers who receive their payroll into a bank account are able to, relative to the group that only have an account, learn to use their account and use ATMs outside the factory. It's interesting, and this is consistent with work, other studies that have been done in Afghanistan, works in Mexico, about the 6-month mark. About 6 months, workers just withdraw their money. They don't trust the ATM. They don't trust the bank that their money's safe in their account. But about the 6-month mark, we see workers leaving more and more little bits of savings in their accounts and using their accounts more and becoming more confident in using the accounts themselves. We also, the second result, we find that workers start to make remittance payments themselves, avoiding these extra charges that are charged by mobile money agents. They're 42 percentage points more likely to send remittances themselves as compared to workers who only receive a mobile money account. We also find through our our mystery shopping, that agents charge about 2 to 4% of transaction amounts for the assistance of over-the-counter transaction. And this is really strong evidence of this learning by doing. These workers who do it themselves are able to avoid these additional fees. So putting this in percentage points, workers are about 15 percentage points less likely to get overcharged in neighborhoods with high account adoption. And that's really interesting, right? So this is saying that workers in neighborhoods where workers are savvier financial customers who have more experience hands-on usage with accounts, the agents are less likely to add on these additional fees. The increase of likelihood of extra charges, it falls, it increases by 44% if the worker signals that they don't have experience, if they ask for help, and high payroll adoption reduces the likelihood of extra fees by 15%. So let me get into the weeds a little bit. If you'd like, I'm happy. Let me wait for questions until I present a few more slides. So as I discussed, this is an experimental setting. This is a field experiment with workers. As an aside, these are we worked with the support of our IFC colleagues who work with the financial providers that we work with. We work directly with Marks and Spencer and some other large buyers who made the introduction to the factories to help us with our study. Excuse me. So Bangladesh's garment industry is the second largest in the world after China, but 60% of formal employment, 85% of exports from Bangladesh are in the garment sector, and employs about 6 million people, whose wages, when we did our study, were predominantly paid in cash. Quite, importantly, by April 2020, we found about 4 million of those 6 million were being paid into an account. Although there has been some backsliding of factories returning to cash, we're right now in the position where there are tremendous opportunities. So sample population, we work with 2 large garment manufacturing firms. Very large firm, about 40,000 employees. We do with in-firm randomization at the worker level. And our sample includes about 3,000 workers with at least 6 months of tenure. And that's because turnover is so high within the first 6 months. We're waiting for workers for at least 6 months of tenure. This is some of our data from our baseline study. Only about 5% had ever had an account. About 20% used a mobile money account, primarily Bcash. Familiar with that? So Bcash and Rocket are the 2 big providers. About half reported having savings, although most savings was either sent home to family to save for them or save them the mattress. About a quarter had formal savings. Again, not always money that they themselves controlled. Often they sent it home to be saved by other people. And about half needed to borrow. And this is primarily for food. And it's interesting, when we talk to the workers, we say, do you have any loans? No, I don't borrow. I have no credit. And then, I started asking, well, how do you pay for your food? And she said, well, I paid for it at the end of the month. I said, well, what if you paid for it right away? Would the price be different? And she said, oh, yeah, it's twice. I pay twice as much. But there's no interest, right? So they're understanding that what they're paying, and we estimate more carefully, it's about a 20% 30% markup on food that they pay for at the end of the month. So this is really clearly a form of expensive borrowing. I'll also add that we did this really nice examination of how the money was spent in a couple of days after payday, and find that about 35% of the salary is being sent home to family. It's a huge chunk. About 20% to rent and other expenses, and the workers have about 25% of their salary remaining for the month's expenses and savings. And so these workers are really working on very slim margins. And in fact, so just to give a look from the statistics, mostly migrant workers, most of them have savings goals. Most of these workers hope to work in the city for a few years to save enough money to buy a home for their family back home. Here we say 15% of monthly earnings. This was on average, as I mentioned, one of the factors was up to 35%. And about 42% of participants are not fully literate. That means that you have challenges using the Bcash, the mobile money product is only available in Bangla. And so if they're unable to read the Bangla, they're unable to use the mobile money product themselves, which is a challenge, globally in fintech products. And so this is just looking at trust. We have a question, do you trust formal accounts at baseline? So this is before when less than 5% had an account. So this is mostly theoretical, hypothetical to these workers who've never had their own account. And we find that we look at other experience, whether you've ever made a formal payment, but for those who've had the least experience with formal products, they're the ones who have the least trust in the system. So this figure is suggesting at least that greater usage of financial services increases trust in the product. As an interesting aside, like I mentioned in Findex long ago, we had a question on, do you trust banks? And some of the lowest income African countries, we found 98% of adults trusted banks. And we knew these people, they didn't have accounts, they probably had never seen a bank, rural low-income adults in some low-income countries. And we went back and asked them, why do you say you trust banks? They responded, well, rich people use banks, so they must be trustworthy, which I thought was an interesting perception. But certainly here in Bangladesh, we see that trust is very much correlated with usage, as well as their comfortableness whether they think they could use it themselves is, again, whether or not they've had any experience using it. As I mentioned, our experimental design of 3 treatment groups to disentangle access and use. Quite importantly, and this is really important for the policymakers on the call, is a big question about who should incur the costs of these payments. So usually, typically banks charge withdrawal fees. I believe it's really important that these fees are not, when you have government transfer payment programs and you have digitized wage programs, that the bank fees aren't passed on to the consumers, to the recipients. In our study, all fees are reimbursed. The workers have, I think, up to 3 free withdrawals. We also provide training up front, very basic training, how to keep PIN number private, recourse in the case of human or mechanical error. And again, as I mentioned, really importantly, and this has become best practice, to have bank staff on site supporting the workers, and a Bcash, a mobile money agent on site to help with mobile money withdrawal. I'm going to add another challenge that we found with the mobile money, which is really which was both surprising and interesting, which is that in order to activate your mobile money account, you need to give the agent your phone number, the phone number of your phone linked to the account. That women in Bangladesh aren't comfortable giving their phone number to strange men. And so simply this barrier of having to give their phone number to activate the account is a strong deterrent to women using their own accounts. And so there are potential solutions, right? There's certainly one solution. Again, my colleagues are studying, Lori Vivali at the University of Geneva and Shabi Ginny, trying to encourage women agents. It's unclear there are any female mobile money agents in Dhaka. So that's one solution. Another solution might be biometric identification, but this is certainly a challenge for women using their accounts outside the factory on their own. Okay, so we installed ATM at every factory. As I mentioned, we had support, provided training. Importantly, these ATMs can be accessed outside of business hours, plus the workers can use any ATM or agent in town. Here's an example, a photograph of the ATM machine. And so importantly, even women who are illiterate, as long as they're numerate, can use the ATM and be taught to use it. Similarly, we gave the workers formally registered SIM card. It's another interesting challenge, which we certainly didn't expect. As I mentioned, the factories were able to, so there are very significant know your customer, anti-money laundering, KYC, AML requirements, especially in Bangladesh, to open accounts. But to open a bank account for small accounts with limited transaction, there are exceptions. So there's what's called, relaxed KYC for these accounts. And in fact, the worker records at a formal firm qualify to open an account. However, to have a mobile money account, you need a registered SIMS card for your mobile phone. And there's no relaxed KYC for SIMS card. It was harder for us to buy people SIMS cards than it was to open a bank account. For that, we had to drive back to villages on mopeds to get documentation from village elders to get the right documentation for many of the workers. So in fact, it was quite difficult opening it was unexpectedly challenging opening mobile money accounts for many of the workers. Eventually, we got it all set up. We got all the workers, their accounts, their payroll, and here's an example of the Bcash product. And this is what it would look like. This is translated from Bangla. But again, the mobile money accounts are much more heavily literate. So illiteracy is a much greater challenge potentially to using a mobile account on your own. So we collected survey data, approximately 2 years, a baseline survey, bi-monthly follow-up surveys, and end-line surveys. Importantly, we had administrative data from both Bcash and Citibank Bangladesh, our banking partner, to study both the real effects on saving consumption as well as these learning effects. I will mention the turnover, as you would expect, worker turnover is very high, especially at the lower salary grades. However, we did a fairly good job of, thanks to mobile phones, of tracking workers who had left the factories, which kept our attrition manageable. But attrition in the garment industry is a very significant challenge. This was a really hard study. So our main results, and I'll try to keep this about 10 minutes, leave time for discussion. So this is our first stage account of looking at this learning by doing. Let's jump to the regressions, easier to show. We do see significant effects. Actually, here it might be easier. On deposits, but that's a little mechanical, right? So this is also what we do find, though, which is quite interesting, is that the first month after getting an account, we actually see that adults without payroll were depositing a lump sum of money. And so even the workers weren't receiving payrolls, we're taking some savings from under the mattress and putting them in this new account for safekeeping, although we didn't see a lot of new funds being deposited over time. Of course, we see the workers being paid, having higher withdrawals. But here's what's interesting. So sending money, we do see more activity of workers who are paid into an account, more transactions. And here's what's really neat. The balance is growing over the first 6 months and continuing to grow thereafter. I find these results really interesting, although the second order of importance of not the focus of our paper, we do find, consistent with the existing literature, important impacts of having a payroll account on savings, consumptions, shock mitigation. One, we find almost a doubling of savings of workers paid into an account, 4 times the savings of 4 times formal savings. And then the question is, where did that savings come out of? Importantly, it didn't come out of spending on food or any necessities. It came out of impulse purchases. We see a drop in spending on chips and soda, for example. We also see around the savings, it appears that more workers are saving money themselves, women especially, are saving the money themselves in DACA rather than sending it home to family to save for them. Again, giving these women greater control over their money. And very importantly, at the baseline, and I was surprised at how high these numbers were. We find up to 40% of workers saying that they skip meals and go hungry at the end of the month because they run out of money. And we find a significant reduction that workers paid into an account are significantly less likely to report this food insecurity at the end of the month. And this raises actually another important question, which I've been thinking a lot about. So we actually do a side paper, which was published as an AARPMP a few years ago, where we offered long-term commitment savings account to workers. And I think typically that's what we all think about, right? When you think about new products for workers or adults who have an account, we think about these long-term savings products, even year products or towards savings goals, where what these workers really need is help managing their money over the month, stretching that money to the next paycheck. And this, really just this intra-month budgeting is really the greatest constraint. They have to pay in the first of the month school fees. If they don't make their school fees, their kids can't go to school. They have to pay their rent. They have to pay for food. They have to send money home from family who's demanding more and more money, which leaves them really very little money to live on. And help, so one of the things I've been pitching is a 2-week commitment savings product, just helping them get that little bit extra money to the middle of the month. That's something we're seeing that these payroll accounts do help marginally on the savings, reducing the temptation spending, and improving shock mitigation. And here are our questions. And then our main results on learning outcomes. We're looking about without assistance, outside transactions, and transactions without intermediaries, sending directly remittances, and avoiding these illicit fees. And so these results are very strongly significant. The payroll accounts increase the transactions, both a total. So it means that they're leaving more money in their account, they're withdrawing it over the month, more withdrawals, and withdrawing on their own outside the factory. The payroll account is 27 percentage points more likely to make an outside transaction than the account-only group, and that's excluding their wage withdrawals. And then learning the results of mobile money accounts here too. And so what this is showing, if you look at the ones on the left, that those who get mobile payroll accounts as opposed to only a mobile account, 62% make direct transactions as opposed to 20% with a mobile only account. And just to clarify, so people who have only a mobile money account, they could deposit money into their Bcash account and make a payment, a remittance payment directly, but yet they're not, only 20% are. Certainly receiving your wages into a payroll account makes it easier. They're keeping their money digital, in other words. What's important to note that the ones who don't are cashing out and then sending their money electronically, which is really very inefficient. And then if you look on the right for indirect transactions, again, it's predominantly people who aren't receiving payroll. But it's still these 33% of adults, workers, who are cashing out their money and then handing it over to the mobile money agent to send it for them. And that's, again, the result of not having the capability, the confidence to send the money themselves. And then let me just very briefly go through this audit study, as I mentioned, where we sent actors into agents posing as workers to understand, one, whether, just how large are the illicit fees charged. Two, does it matter if the worker sort of reveals themselves to be less financially experienced? And three, again, any spillover effects on the community. So in other words, by digitizing the workers, are non-workers in the community benefiting? Is there this sort of contagion of financial capability, which we would like to see? And so here are our results in whether there were extra charges imposed. So on the right, in high adoption areas, in areas where there were factories who were paying electronically, 23% of workers were overcharged, were charged extra fees. About 40% in low adoption, so about 16% less likely to be overcharged in areas around the factories. So suggesting this learning at scale reduces the information asymmetries and robust regressions. And so our conclusions, we introduced a simple technology, payroll accounts, which we know is beneficial to the factories and to their ultimate buyers, and we believe beneficial to the workers. And these are workers who had little financial experience, little financial, formal financial usage of formal financial products before the study. We vary both access and incentives for the workers to actively use their accounts. And those that use their accounts learn to avoid extra fees, learn to use their account without assistance. I didn't show, we also did a small machine learning piece where we find suggestive evidence that the benefits are stronger for women. For those who actually have financial experience at the baseline, they have the bigger effects. But again, because our sample is so predominantly women, these results really only suggestive. But I really find exciting is the suggestive evidence of market externalities of consumer learning. So thank you, and happy to answer any questions.
Thank you, Leora. Absolutely exciting piece of work, and thank you for presenting it so clearly, very eloquent. And you make some of the difficult methodologies sound very simple and clear, especially when you are mentioning the interventions that you undertook. So absolutely exciting. Thanks very much. I think there is quite a lot to discuss, and higher education in a way, even in the selection of, say, like the garment industry, which was one of the, the largest, and then the way you designed the experiments, there is a lot we can learn from this. I'll come with some comments later, but let me give an opportunity to Aisha, who has been active in a conversation with you over a long period of time. So thank you, Aisha, for starting those conversations. And Aisha would like to take the first discussion on this paper. So Aisha, you have the floor.
Yeah. So.
Oh, thanks. You have been prepared PowerPoints. Excellent. Yeah. Good.
I am trying to, yes. No. Okay. So thank you, Leora, for your presentation. And this was an excellent and inspiring story. And I have gained the same joy while going through your paper since the last few days. And the content, the way it's written, the way paper is organized, the way the experiment is conducted, and the flow of paper all were truly impressive. And thanks again, producing and bringing this high quality work to us. And I have a few comments on the paper that I want to present in the next 10 minutes. And first of all, I really would like to talk about the stars of this paper. The quality of the work made me curious about the authors, and it's crucial to first talk about the labor force behind this high quality work. So, Dr. Emily Breza is an assistant professor in economics at Harvard University, Department of Economics, and her research areas are development economics, social networks, development finance, household finance. What is more important about Emily Breza is she has done several experimental works that have been published in the top economic journals. And in particular, she has done several works with 2019 Nobel Prize winners, economics, Banerjee and Duflo, who are the main people in the area of experimental economics. And Leora, we already know now, but just to mention, she is one of the prominent names in the area of financial inclusion and put much effort in the collection of global Findex data, where she sowed the seeds, and now we are collecting the fruits of her efforts. And Martin Kans, also he's a senior economist in the finance team of the Development Research Group in the World Bank. And his research also focuses on banking, behavioral economics, and the political economy of the credit market. And again, Martin has led numerous field experiments and impact evaluations on financial sector topics, primarily in the South Asia. And his research also appeared in the top ranking journals of economics. So we are lucky enough to meet with these leading scientists who spent several years on the experimental works in the area of development finance. Also, that makes the quality of the work take it as granted. Now I would like to provide a brief overview of the study. The main research question that the paper highlights is to what extent risks to consumers can be mitigated by learning by doing that occurs naturally as new financial technologies are introduced at scale and used on everyday basis. So in order to answer these questions, authors study consumer learning in the context of payroll accounts, a simple financial technology. They conduct a field experiment with a population of salaried garment factory workers in Bangladesh who received their wages entirely in cash prior to the study. And the authors actually aims to look at the effect of this treatment on consumer protection, real life effects, and positive externalities. And by doing this the paper fits into the literature, and in particular, it speaks to the three strands of the literature. The first on the relationship between financial products and consumer protection. And second, the results speaks to the literature on financial inclusion. And third, the results add to the literature that has examined how commitment features and default assignments in financial products can incentivize account use and generate behavioral change. Contribution. So, with this paper, the authors contribute to the existing literature in three ways. First, there is little evidence on whether learning by doing can enable consumers to avoid common risks over time. They shed light on these issues by examining whether active engagement with a financial technology helps consumers learn to use its features to their advantage and avoid common consumer financial protection risks. Second, they contribute to this line of research by documenting real impacts of payroll accounts and consumer learning. And third, this study uses assignment to payroll accounts, a technology that generates similarly strong incentives to actively engage with an account and to examine impacts on consumers' learning and real outcomes. These are the brief lines from the paper. So what are the strengths? I would like to talk about the strengths of the paper. The paper as a whole carries out many strong aspects and apparently provide quite robust and strong results. But I would like to highlight a few crucial points which I believe strengthen the work remarkable. First of all, country and industry selection. The ready-made garment sector is one of the largest exporting industries globally and among the most important sources of formal employment in the developing world. And Bangladesh currently ranks as the world's second largest exporter of ready-made garments. This is just behind China. And country's large garments industry accounts for approximately 20% of the country's GDP. That makes the country and industrial section much more remarkable in the context of a payroll study. So the second strength of the paper is on the methodology. First of all, the authors use intent to track analysis, which is a very good way to avoid the effects of crossover and dropouts, given that there are many turnovers in the garment sector. Many workers drop out due to low salaries or other circumstances. So intent to track analysis increase the quality and provides information about the potential effects of the treatment policy. Another strength which paper does is to create two treatment groups. The main treatment group, which the bank or mobile payroll treatment account, this is the main treatment group, and who has bank or mobile account and receive payrolls from there. And the second group is bank who receive bank and mobile accounts only, that continue to receive their salaries in cash. So this will help us to generate and separate the effect of receiving direct deposit wage payments into an account from the effect of account opening only. So this is a very strong aspect of the paper. And on the data set, one of the main strengths of the paper is for population, their study consists of workers employed by two large garment manufacturing firms located in Greater Dhaka, which is the capital of Bangladesh. So they collect the data of the workers who work in these two main garment factories. And they also work with the main banks and mobile money providers of Bangladesh, which increases the reliability of the data collection process and data sources. Moreover, access to administrative data allow them to supplement and validate survey responses, which is very important because self-reported data always receive many questions, many criticisms, and they eliminate this problem by combining self-reported data using administrative data. And administrative data reflects the full universe of workers receiving an account and is free from attrition concerns and concerns of enumerator demand effects. And having access to this complete transaction data for all accounts linked to this study and allows them to test for these possibilities and verify the quality of their survey data. And another strength of their paper is the use of learning indicators, and in particular outside transactions. It is an indicator whether a transaction was performed outside the workplace, which shows to what extent the worker learns how to use these new financial technologies without access to help. And what is very smart in collecting this data is they collect data from these partner financial institutions. They collect geographical data and see where these workers use these payroll accounts from ATMs or other mobile money providers outside the factories, because in the factories there are people who help them, who show them, train them to use these financial tools. But outside the factory, they are on themselves. So the geographical data provided by these financial institutions, mobile money providers, or other partner institutions help them to see where these workers use their payroll accounts outside the factories. So I think this is a very smart idea to identify the learning indicators. Another good idea, which is a very smart idea, is to eliminate peer effects. Peer effects in the sense that the positive externalities, since their estimates are based on a within randomization, we might be concerned that their results, especially the estimated impacts on learning, could be obscured by peer effects. While any learning from peers will bias their treatment effects towards zero, they examine this possibility to understand whether the peer effects are at play in their setting. So they deal with that by controlling the size of each employee's network. Again, this is a very smart idea. And if not, there will be a big question in their externality results, but they deal with these peer effects in a very smart way. So these are the strengths that I identify, and I believe that make the study much more remarkable. So I want to talk about I have a few critical points and a few ideas that may improve the paper further. The first is on the structure of the paper. I'm not sure whether the participants have a chance to go to read the paper. And my first comment on the first section, which is introduction. The introduction was quite comprehensive, detailed, clear, focused to the point, but it was relatively long introduction. It was like 7-8 pages. And the information there could be distributed to the other sections of the paper, and which could help authors to shorten the introduction. And another point regarding the introduction and the background and motivation of the studies, I couldn't find too much discussion on the theoretical background of this study. And in the first paragraph of the introduction, there are few comments, and I found out some few comments also on the footnote, but I couldn't find sufficient theoretical argument in the paper. And also in the introduction, you talk about COVID-19 and you connect your study to COVID-19, but throughout paper, even in your results, I couldn't find any result, any argument, any discussion on COVID-19. I think a COVID-19 discussion in the introduction may confuse your reader, as they may expect an analysis in the context of COVID throughout your paper. And given that your study has been conducted between 2014 to 2016, so a connection to COVID could be included in maybe further research, but maybe it's not a good idea to include in the context, especially in the introduction, in order not to confuse authors, readers. My second comment is on the background and research design. Actually, it was very clear, and regarding the content, I don't have any questions, but there is repeated information from introduction, like what I said. you can shorten introduction and move some of information from introduction to other sections in order to avoid repetition. And my other comment is on the empirical strategy. And actually the empirical design strategy was impressive. No comments on that, but in your empirical model setting, you didn't use any reference. On which you base your empirical model. So it would be good to cite few references, how you build up your empirical model, how you choose your control variables, just to provide a justification to use of these in your regression. And in overall, this is a suggestion. You have, I feel like I was reading two studies. The one is on the impact of payroll on consumer learning and impact of consumer learning on consumer protection and trust. This is a separate work. And second, I read another work which analyzed the impact of payroll on real effects and externalities. And I don't know whether this may be applicable or not, but maybe you can think about to divide this paper into half, and you can kill with one stone, two birds. So this is also another point. And regarding a general comments that I want to do, and one thing I wish the study would address is the pervasive culture of delaying wages for garment industry workers, especially for the female workers. Whether introduction of new payroll gizmos would matter to a big portion of workers who regularly receive their wages late or at times are not paid at all is a worthy question. As far as I read from the worker situation in Bangladesh, and because a lot of garment industry manufacturers, industry-related unrest and violent protests that happen in Bangladesh because of these late payments. So it would be good to take into account these wage payment delays. Of course, you can argue that this is beyond your scope, and of course this is a fair point, but given how widespread these malpractices in Bangladesh, I would be cautious at fully generalizing the happy-go-lucky conclusions of the paper. And furthermore, due to a long history of mobile cash transfers by tech pioneers like Bcash, a big chunk of non-banked population is already using to receive mobile payments, and this has been practiced in long. So my question is, actually I couldn't find any information on your financial literacy throughout the paper, maybe I missed out, but have you checked whether these people have previous experience in using mobile money, or did they ever receive their salaries through these mobile money providers previously? So because a previous knowledge on the use of mobile money or any experience in receiving the wage through these mobile money providers could also bias your results. And personally, I also suspect that World Bank economists gained access to a factory that is already prominent, apparently. This is all at one point a strength of the study, but at the other point, these prominent factories has knowledge of the experiment taking place. So in other words, there could be a favorable selection bias, so which makes my first observation on delayed wages irrelevant for modeling purposes. So yes, thank you.
Thank you very much, Aisha. And clearly, you've read the paper in great detail, and thank you for coming up with the general as well as granular comments on the paper. Perhaps I'd like to ask Leora to hold her fire, trying to respond to your comments. And meanwhile, I would like to call to ask comments from a policymaker. Dr. Peter Rose used to work with the World Bank for many years, and then became a finance minister of Seychelles. So Peter, you are here. Yeah, I can see you if you want to unmute and give some comments on this paper from the policymaker's perspective.
Yeah. Thank you, Professor Murinde. You can hear me?
Yes, very well.
That was a generous introduction. I love it. Having a fellow employee from the World Bank, I have read the paper. And to be honest with you, Professor Murinde, I have some comments, deep-seated comments. And to do justice, I would like to certainly ask 6 questions as a policymaker perspective. 1, what was your expectation from this research study? It would be good you take down the notes because I would like to follow it up. Secondly, your research focused on Bangladesh only. Why? There are many countries involved, and especially low-income countries, depending on cash wages. Third, why factory workers only? There are many workers who say gets cash payment. For example, construction workers, farmers, and a whole lot. You can name it. I don't have to waste time to mention the whole list. So with regards to if you had used the construction workers as an example, could have been used as a subset to compare the consistency of your results. You know, I'm very strong on consistency because this is what really, really asserts me and comfort me. This is very, very important. You just don't come up with a research to say, oh, it's inconclusive. It's true, it's inconclusive, but nevertheless, we are here to help you. Now, fifth, how can your model be employed in Africa, for example, large-scale farm workers? You see, mind you, when you are thinking about the research, you don't think about a specific country. You have to think about the other countries in this particular category that would be in demand of these type of services. And mind you also, I don't know if you've researched in depth, in Kenya, we've got M-Pesa. The farmers, they use telephone banking system. So it's not really right to say that people are really a little bit adverse or being incompetent to use electronic system. 6 questions. Look at your figure 1 graphs. It highlights formal accounts. If I look at the data which you showed to us as academics and policymakers, the trust is only 37%. This was the respondent. No trust, 63%. I think this in itself, when you were presenting this graph, should have alerted you there's something wrong. Now, with low experience, the trust effect, 30%, no trust, 70%. So what is it wrong or something which I'm missing here? Now, figure 2, it looks at the confidence using formal accounts. Comfortable, 34% are comfortable from your respondent. Not comfortable, 66%. Going back again to low experience. Comfortable, 23%, not comfortable, 77%. Now, one thing which I missed out from the whole perspective of this presentation, Mind you, also when you are trying to use electronic system for cash payment, there's a key stakeholders missing, which is the labor union. Did you consult with them? So this is very, very valuable because the workers can say, okay, union was not consulted. So, and mind you also, Leora, I'm sorry to say, I'll be very blunt as usual, meaning that at the end of the day, there's a lot of work that needs to be done. And I honestly believe you have to go back to the drawing board. Thank you, Professor.
Thank you, Peter, for those observations and trying to bring in the policy dimension side of the story. Before I call back Leora, I'd like also to invite Timos, who is a research fellow in the Center for Global Finance and is working in an area of fintech to give some quick observations, and then we can open to the floor.
Well, what comments can I say after all these comments from the previous ones? I think that I really enjoy reading the paper. For me, let's say it's a good way to learn how this type of research should be done. I agree with the comments of the previous discussions. Not all of them, but most of the comments. What I want to what I find interesting in this paper, and one of the strengths, I think I didn't mention that. But I really like the fact that, for example, when you do the audit research, you take into account the agent density, because when I was reading the paper, I thought, okay, agent density may play an important role. There are other papers in mobile accounts have done a research, and they find that this is a factor that may affect the decision of the households to use or not these mobile accounts, and whether or not decide to pay the costs that are associated with these mobile accounts. I also find interesting the fact that in your research, you don't find the connection between the use of these accounts and an increase in remittances. And this is something which is different compared to another research that was conducted in Bangladesh by Lee in 2020. You mentioned about that. I just wonder, in the demographics of your sample, how many there were actually rural workers and how many there were urban workers, whether you did some sort of analysis to try to see how close are to the other papers results. I agree with Peter's comments in terms of why only Bangladesh, why only factory workers, and this is really. I thought, okay, we find some results. Can we generalize it? Can we say, for example, that okay, implementing payroll accounts would always contribute to learning, and for instance, I wouldn't go to developing countries in Africa or in Asia. I just let's look at the in Europe, and let's think about Romania or Bulgaria, where we have still people getting paid in cash. If we implement the same experiment, are we going to find similar results? So this is also something to consider. And now, in terms of the research itself, I just have a couple of questions, more specific. Why, for example, what is the how you choose the criterion, you choose the percentages of how you split the treatment groups. This is something I couldn't find. Maybe you mentioned somewhere, but when I was reading, I couldn't find it. And then, did you have in this in your sample, in the population, what are the aids, for example? Because I suspect older people might find it more difficult to learn or something, or you couldn't, you didn't have that variation in it, so you can create groups and test this. And finally, again, I will agree with Aisa, and in terms of the COVID-19, because you mentioned it in the introduction, and I suspect that the things, if you repeat the experiment now, the things will be different, because for the past 2 years, almost, people were actually forced to do things online. So this kind of learning by doing maybe was forced upon them. Now, whether they learn actually or not, this is a huge discussion. Why? And this is my final point. We just need to consider, all of us, when when basically we surf in the web and we visit the website, there are some pop-ups saying this website collect cookies. Do you agree? And most of us we just click yes, 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 and no one actually read what is going on behind what we click yes. So my point is that, okay, there are this technology and these new products, and there might be information in these new products when you create your account, but are we going to read them or not? Are we going to learn eventually or not? So this is maybe something we should consider for future research. Thank you.
Thank you, Timo. Muted. Thank you, Timos, for those important observations and also questions. I don't know, Aurora, whether I should give you an opportunity now to respond to some of the comments if you wish to, or whether I should go to the floor and take some further questions. What is your pleasure?
Well, I'll just take a minute or two for some clarifications.
Okay,
which might
go ahead, please. Go ahead.
Thank you very much to all three discussants for these really helpful comments. Because, so effectively, we're just biting off and looking, deeply into one specific use case. When we talk about financial inclusion, and the challenges of banking the unbanked, of bringing people in the formal financial sector, there are a variety of opportunities and channels. What we're saying is here are 7 million women, mostly women in Bangladesh, who work for formal companies. So they're not farmers, they're not construction workers. Are these lower hanging fruit, right? So are there opportunities for us to help these 7 million workers, in addition to trying to address the much harder challenges, for example, of banking informal workers? And so, yes, these are firms with the international buyers who are increasingly really enforcing. It's interesting, just in the time we've been in Bangladesh, we were there, this was after the tragic fire. Every large buyer had many people living full-time in Dhaka, visiting the factories on a regular basis to make sure that the labor rights were closer to being fully enforced. And absolutely, these women's lives are incredibly hard and difficult, and the hours and the living conditions. And the hope is that, is this one way of making their lives a little better? And so, like when you refer to delaying wages, in fact, we had to be very careful when we worked with the factories to digitize the wages, that the workers had to be paid the full amount on payday, or they would lose their Marks and Spencer contracts. So at least within this formal sector, again, about 7 million workers, there's less of delay in wages. Although I would direct you, not to only talk my own work, we have a nice paper, for example, in Ghana, a working paper showing that for example, the delay in government wages, which is rampant, is the main reason that workers get into spiraling into very expensive credit, for example. So absolutely, late wages is a challenge, but less so, I think, in this context. I guess two minor other comments. So one is, and this also touches on some other work we're doing. Well, first, the Leah and Jonathan Murdoch paper, which is a wonderful paper in Bangladesh, and so let's mention that. So what they do is they look informal, mostly men workers in Dhaka who send money home to their family. So it's a very different sample. These are mostly men, mostly informal day workers who work, gigs, whatever jobs they can find. And what they show is once mobile money is introduced into this market, and most importantly, both the workers and the family back home are trained to use the technology, more remittances are sent home. And they give an explanation that, they actually show for the workers in the city, the deterioration in their mental health and their happiness. And part of the story is that the workers back home, it's so easy to get the money now that they're constantly demanding more and more money, that they can just call them up and say, listen, we need more, you have to work harder and harder, and that affects the amount sent home. I think those mental health implications are really, quite important to think about. This is a different sample. These, again, are wage workers with regular income, and so we wouldn't expect an increase in the amount sent home. That's that's tied to how much they earn. But certainly, we would expect, and this we actually couldn't exactly capture, but that the family back home is getting more of the money if it's sent through formal channels, because less is being taken off from informal payments along the way, and certainly safer, right? Rather than sending with a friend traveling home where the money can be stolen or lost, it's going through formal channels, and hopefully the family in the rural areas having the money sent into an account, so they potentially have the benefits of financial inclusion as well. Peter, thank you very much for your comments. And again, what you were suggesting are all areas for additional research. Other countries, other contexts. We hope the results are generalizable to formal employees, especially, thinking about the garment. There are, we're working now with the ILO, which has just created a whole institute just looking at digitizing garment worker salaries. These are huge numbers around the world of women, and potentially we can improve their control and management of their money, as well as a spillover to their families and communities. You mentioned a really important point, which is labor unions. In Bangladesh, we work with, there aren't unions per se, but we absolutely worked with the worker leaders before this was rolled out. And also just for everybody, all the comments, everything was completely randomized. And so across age, across work experience, we control for work experience also in the randomization. But in terms of the labor unions, this raises something really interesting. So we're doing some work now in Cambodia, for example, which is in a different context. And there, the labor unions are really, really strong. And we just finished a baseline survey of workers and of factories who would like to digitize, but really feeling the biggest resistance is from the labor unions. And interestingly, there, what seems to be the basis of this challenge is that Cambodia actually has the highest MFI microfinance borrowing rates in the world. Citizens in general and workers in particular are highly indebted. It seems that the labor unions are the source of a lot of the credit. They give out the credit to the workers, and then they stand next to the workers with various enforcement mechanisms on payday. And as the workers are receiving their cash, they're handing it over to the union, back to the union to repay their loans. And unions are scared if this money is digitized, they don't have the immediate access to the money. Under various threats potentially, and that's important, right? So but being aware of the challenges can help us, right? So we could think about explaining to the unions that there could be auto deposits to repay loans, somehow have them collaborate with more formal lenders to provide the workers perhaps cheaper and better credit terms. And so understanding the challenges, such as the labor unions, such as infrastructure in Cambodia as well, we're discovering the mobile money payroll product requires an app, as opposed to Bangladesh and most of Africa, which uses a text-based mobile money platform. It requires you to download this very heavy app, and the workers are saying, we don't have the memory, the data is too expensive, we don't know how to use this complicated app. And so understanding the barriers is part of what all this research is about. So thank you. Happy to take more questions.
Yeah, thank you, Leora, for the detailed response and also pointing to your new direction in Cambodia, to which we look forward to.
Make one more thing about the farmers. Again, this question of leveraging supply chains, global value chains. And again, this is, clearly there are millions of people who don't work for global value chains, but seizing this potential opportunities. We're also now working with agribusiness chains. So for example, we just completed a large survey of tea pluckers in Sri Lanka, which is a terribly, discriminated legacy of discrimination. It's a Tamil community, minority community in Sri Lanka, where the situation there is simply that women pluck tea all month and their husbands literally pick up the money for them on payday. As a banker said to us, the money goes round trip. We give it to the plantations in the morning to pay wages, and the pubs deposit it in the afternoon. Money's literally being spent at pubs by the husbands in the afternoon, and very little is getting home for the family to use. And so the other question again is the impact of digitizing these women's wages, and also because of the nature of agribusiness, which is so interesting that their tea that they pluck is weighed multiple times a day, using Bluetooth-enabled scales. There again, can we increase the frequency of their wages? Can we give them advances on their wages? Also very carefully tracking, there are many agribusiness communities where domestic violence is a challenge. You can't look at just financial inclusion as a silo. It's really part of the greater society. And seeing, in our case, we're looking specifically on, these remittance channels and making that more efficient. In other contexts, there are other, in Cambodia, you're looking around credit and relationship with the labor unions, and some of these agribusiness contexts, looking at the woman's economic empowerment within her home. But again, it's the beauty, the advantage of these sort of micro studies is really being able to hone in and isolate specific questions and hopefully come up with some solutions to help these communities.
Thanks very much. Thanks again. So let me turn to the audience. If you want to make a question, please raise your hand. And we already have some questions in the chat room. So let me first pick the questions in the chat room. So I think the first comment was from Richard, saying, have the operators of the mass payments into fee accounts looked at the issue of being sure where the money is coming from? Okay.
Victor, if I could
yes, please go ahead.
clarify.
Yeah.
That question was not in response to Leora's paper, which I thoroughly enjoyed listening to. Was more a comment on the discussion that some of us were having before the paper started, where I think you were talking about the Ugandan context of fees being paid directly into fee accounts from essentially crowdfunders, and so that was the context of that. But
okay.
But I did see that Juliet asked a very pertinent question on if you introduce relatively uneducated workers into forms of online payment, mobile payment, do you expose them to frauds and other financial crimes?
So that's, let me quickly answer that. That's a great question. That's again part of the motivation. As I mentioned, as I opened, digitizing these wage payments in this industry globally is being driven by the large buyers, by Marks and Spencer and H&M and Gap, etc. And so this is something that's happening. The factories don't want to lose their contracts. They're digitizing wages, and there's tremendous concern that when you and similar to especially over COVID, governments are increasingly digitizing their welfare payments. There's a study done by Center for Global Development in Bangladesh, of a study of They digitized government transfer payments to mothers. And these were, again, the poorest, least literate, numerate population. And they found that the majority of women said it was great. It was much better. They had greater control over the money. They could keep it safe outside their home and use it when they needed it. About 15% of women said they were worse off. That before, the cash, at least they were able to hold on to. But because they were so unable and comfortable using the technology, they simply gave the phone to their husbands or sons to withdraw the money for them. And now they were losing all control over the money. And that's really important, right? To understand these challenges, excuse me, which suggests, and again, that's part of our study, is understanding how can these products be best designed to improve the lives of government transfer recipients, of these workers. And so, absolutely there's concern over the capability, financial experience and capability of the workers. And that's why, again, what we're hoping to show in this paper is the importance of, it's not enough to provide classroom training to the workers before you digitize their wages, which is what some factories are doing. We know that financial education in the classroom might help you answer questions on a quiz correctly, but it doesn't change behavior. What we're suggesting is that to change behavior requires this, continuous support of the workers, the continuous learning by doing that will enable them to confidently and independently manage their finances.
Yeah, thank you. We have a question from Mariam. It's in the chat, but Mariam, if you, maybe you would like to unmute and ask the question yourself.
Thank you, Victor. It's very interesting. And Laura, it's very interesting research. Actually, it's in line with my research as well. I was wondering, since this research, if I'm wrong, please correct me, is somehow assessing this like reverse causal chain between like financial inclusion and financial literacy. I was wondering if in general it's increase the level of financial literacy. If not, so let's talk about first question, then I'll ask a second as well. Thank you.
So what are you defining as financial literacy, right? So if you're asking, can they answer questions on interest compounding? Probably not. But I consider financial literacy, really the better term I like to use is financial capability. Can you manage your money yourselves? Do you understand? Do you understand? Are you budgeting better? The outcome measures, as opposed to what questions you can answer in a quiz. Has your behavior changed? And our study does show that, again, these using accounts with support does change financial behavior for the better.
So the second part of the question was like, I was wondering if can we say that learning is selective here, since we are giving them access, and because of that access, they learn something which is like useful for them? Is it possible to say, is it fair to say that this learning is like selective, this increasing the knowledge is selective?
I'm not sure if I understand the question, but so I should kind of note that both workers who receive payroll and continue receiving money in cash, anyone who got an account, all workers receive the financial training. So at the outset, when we open account for workers in both the access and the use, both treatment groups receive the full training. Workers who aren't receiving payrolls, if they want to use the ATM on site, they receive the same support from the bank as do workers who receive the payroll. So everyone's eligible for that so-called training. It's so that's why we hope we're disentangling the effect of, in addition to the account and the training, the electronic payrolls having this marginal impactful impact on their financial behavior.
And the second question is like, you talked about financial inclusion, and probably I guess you are going to construct your own index, or probably you have constructed your index. May I ask about its variables and its elements? what variables you consider to construct your index for measuring this financial inclusion?
So I don't think we use the word financial inclusion. We're just, again, we're looking at account ownership as access. I guess that would be the broad financial inclusion proxy is simply access to an account at a bank or mobile money service provider. So that's financial. Actually, it's the World Bank definition, having an account that can be used to both store money and send and receive payments, electronic payments. So that's our metric. And then our usage metrics, excuse me, is using the account to save and send or receive remittance payments are the two use cases we're examining.
Yeah, thanks for raising those questions, Mariam, and thanks, Leora, for responding. As I said, people are already aware of your index, and so don't be surprised if people are asking you about some of this. Even if it's outside the paper, we are trying to learn from the great work that you've been doing. I'm trying, I don't see any hands up right now, and neither do I see any further notes in the chat room, any further comments in the chat room. But maybe while some people are thinking, trying to figure out the next question, and of course we are running short of time as well. You know, let me try to just raise some observations for clarity, Aurora. You correctly actually explained very well your sample population, and you stated that it is largely unbanked and financially inexperienced population. But what is not clear to me is whether in your intervention, did you have to help consumers acquire bank accounts or mobile accounts? Or did, say, the government companies help them to do that? Or should we assume that everybody already had either bank account or mobile account? I'm trying to see whether there was a cost implicit in your intervention.
No, thank you. So at the baseline, only about 5% of workers had bank accounts and 20% had mobile money accounts. And so the first step in the project was, again, for the two treatment groups, the second and the third, who receive either an account at a bank or mobile money service provider, to open the accounts for them, to support them in opening their accounts. And that's, again, a benefit of being a formal sector employee is the ability of the factories, for example, the labor, your worker records meets the AML-CFT requirements to open an account. And so whereas, many countries, ID is a challenge, including in Bangladesh. So many, especially women in Bangladesh, don't have a formal national ID, which you need to open an account. Yeah. But all firms in the export development zone for markets, for their buyers, to certify that they're not hiring children to prevent child labor, have to have collect information on every worker, including medical exams, to certify that it's not that the workers aren't underage. And so that information is enough to open a bank account. So the first step we did was work with Citibank Bangladesh and the factory and the workers to open accounts for all the workers in the second and third treatment group. And similarly, opening Bcash accounts for those who didn't have it as well.
Yeah, thank you. Incidentally, I was talking to one of, I think, former current NYU colleague, Yaonyako, on Bcash, and it was a different kind of context from the mobile money transactions we are. But I think Bcash is a big thing in Bangladesh and these economies. Just to follow up, in your baseline, were you able to identify some of the workers who may already have been organized themselves into either formal or informal group transactions? Because the positive result you get, about changing the behavior is that they were able to take on intramonth budgeting. And maybe they are just transitioning from the old habits whereby they were able to arrange in groups and share, transactions, say I take your salary, you take mine next month, kind of a usual transaction. Did you come across that? And if so, how did you treat it?
That's a great question. So, the African model of Rosca's merry-go-rounds. So again, because we were the advantage of a randomized treatment group is the workers were randomized, right? So we should see as many workers in the control group who participated in a ROSCA, in a community savings group, that were in our other sample. But we do collect those summer statistics on experience with I don't have the data offhand, but that's something we test for. We don't find any significant differences in prior financial behavior between our treatment groups. So that would include participating in semi-formal, we call them semi-formal savings groups.
Thank you. Sounds a good insight.
That's absolutely true. I mean, certainly experience with semi-formal savings groups, once you get it back, it makes you're able and willing to save, but potentially doing so in less safe ways. The hope is that once you have an account, the money could be saved in the account as opposed to one of the members under one of the members' mattresses.
Okay. The next question I have a comment is the one I always get that question asked to me, so I may as well ask you this question. It is, do you have a theory of change behind this paper? I always ask about the theory of change whenever I have explanation. Do you have a theory of change? Oh.
Yeah, and so this really goes back to the first iteration of financial inclusion research and why we collect the Global Findex database, which is that formal financial services can have a real effect on the welfare of individuals and households and businesses. That access to formal financial products allows you, we know it's now, there's been enough evidence that it allows you to save, to borrow, to invest, educational opportunities and business opportunities, and to build resilience. So an emergency hits, you're less likely to fall into poverty. And the example in our paper is sending remittances through formal channels as opposed to in a friend's backpack is safer and cheaper and more reliable. And so we believe it's welfare enhancing. And so we're trying to see for this one, and again, of course, as Peter mentioned, there are many market segments within a country. But looking at one market segment, which are formal sector workers, which is a large and growing number of women, and mostly women, if we can provide them with formal financial services and show the benefits to these women of formal payroll. And so, really, our conclusion is that it's good for it's good that electronic payroll is good for the factories. It saves the factory money. It's good for the ultimate buyer in that it's a way of documenting fair wages. And we're hopefully showing that's also good for the worker.
Yeah, excellent. I think that's can cap it up very well. Thank you. And just a bit follow-up. I thought that maybe there are some assumptions, whether these explicit or implicit. Maybe there are assumptions in this one. For example, assumptions about transaction costs. That all the workers face the same transaction costs in terms of their budgeting allocations. And for example, in the allocations, I could see savings, but I don't see investments. So maybe the assumption is that savings and investments are kind of synonymous because, savings, what the workers put aside. Investments is if they plow that money directly into shares or part of government bond they are acquiring, or invest in a corner shop or a family shop next door. So so I suppose the reason why I don't see savings is because it's why I don't see investment is because it's taken synonymously with savings. Okay. Yeah, okay, so I think that's about, there was another post by another assumption. So the assumption about transaction costs, the second transaction assumption about savings equal to investment. And post by another assumption about the that if there is a family employed in the same factory, say a man and his wife, or a woman and the husband are already employed in the same factory, of course, the digital opportunity give them to separate the accounts. So unlike in the old stories you are told us, whereby the man takes over the account of the wife almost kind of by force, but this time it is all digital. So they have to sit down and kind of allocate. So in other words, when you are talking about women, you are talking about women even if they have husbands working in the same factory.
Oh, absolutely. You want women to have their own account and not share accounts with you don't want a woman's wages to go into her husband's account. As wonderful a marriage as they may have, the goal is for women to be paid into their own account. They have greater say on how the money's spent. It's funny, when I remember piloting Findex in Ghana, and we asked the headline question, do you have an account either by yourself or joint with someone else? And every woman asked me, what does that mean? I said, oh, like in America, we have joint accounts, both the husband and wife.
Yeah.
Like, don't you do that? Your husband will steal your money. You never give your husband access to your account. And I came home back to Washington and said to my husband, we may want to rethink this joint account business. These African women are warning me. No, but in all seriousness, it's important for women, and we have tremendous evidence around this. I'm not suggesting that this is unique to Africa or Asia. That it's important for women to have their money, certainly their salary, put into their own account, and that gives them a more comfortable seat at the table in deciding household expenditures. There's growing evidence that when a woman has her own account, the household makes different budgeting decisions. More money, reasons we don't maybe have a total impact. More money is often spent in nutritious food and education, and the family. And it's interesting, there's an interesting point you made about investment. And here, the study was only over 2 years, but we do ask about savings goals. Often a large investment is the goal. I'll work for 10 years so I can buy a piece of property back home. And so we do ask, and one of the things we do find is that workers paid into an account are more likely to report that they've gotten closer to their goal, that they're on track towards meeting their savings goals. But you're right, we don't see any impact on investment during the short period of time that we study.
Okay. So I think I don't see any further. I think we are so grateful for. Oh, I can see a hand from Peter. Did you want to come in as we close? Just if you 1 minute,
Yes.
as we are running short
Yes.
of time.
Yes, Professor, I'll be very quick. This is a fellow colleague from the World Bank. But given the model that you're applying, certainly you could use it for cash transfers, because there are so many countries receiving cash transfers from the World Bank. Thank you.
Thank you. Thank you. Thank you indeed. I don't know whether Aurora wants to respond to this quickly.
Oh, no, certainly so the World Bank, actually the Gates Foundation recently funded a World Bank initiative called G2PX, which is explicitly around encouraging the digitization of government payments, including social transfer payments, pensions, wages, and exactly. So there are a number of studies now, just again, trying to understand what's the best design to make sure that the recipients, which are often the poorest market segment, understand the product and can use it effectively themselves. And two, do we find any evidence that proves that horse racing cash versus electronic payments improves the recipient's welfare?
Okay, thanks so much. And, once again, thanks so much. We are so grateful to you, Leora, for this interesting paper, great paper, I think, which will provoke so many research projects in terms of impact on further research and also on policy. I think this has greatest potential. And thanks for spending all the time to explain in great detail some of the questions on the minds of many people here, including trying to move into experimental type of studies. Some people argue that they are very expensive indeed. They quite involve a lot of cash to do. Some spend around time working on the theory of change. You have shed light on both of them. And yes, and let me also thank all the participants who have been able to come to this seminar and participate, as well as give very useful comments and feedback to Leora. So once again, thanks everybody, and we see you next week for another exciting seminar. But for this one, let's give our applause to Leora for this interesting piece of work, and thank you, Lee. Thank you.